Today we are today we are going to have two speakers to talk to us on finances. And so we're going to have financial literacy. There's going to be 45 minutes of presentation from the first presenter. The second presenter would also use 45 minutes and would have 10 minutes of questions. So without wasting much time, we would quickly zoom to action. Permit me to say something brief about our first speaker. Our first speaker would deliver on financial literacy and debt exchange in Ghana. And this person has been recognized by the Chartered Institute of Management Accountants, SEMA, for his outstanding contribution to the accounting profession. He has won the SEMA Campus Culture Excellence Award, which is the first ever by SEMA. This award recognized faculties and student bodies that launched successful campaigns to promote the SEMA professional qualification. The SEMA Excellence Award celebrates outstanding academic partners, tuition providers, and students who have made significant contribution to the accounting profession and the Institute over the past years. So, ladies and gentlemen, I want you to help me to welcome Mr. Serium Kawo. He is going to be our first presenter, and he's presenting on the financial literacy and debt exchange in Ghana. You are welcome, sir.
Thank you very much, my brother. And thank you to the listeners and those who are linking us today. I'm going to look at financial literacy and debt exchange in Ghana from the University of Cape Coast campus here. For our presentation today, I'll look at the meaning of financial literacy. What are the 4 pillars of financial literacy? Then I will look at the financial institutions and their regulatory authorities that we have in Ghana. So I will go to Bank of Ghana website, what they have termed Bank of Ghana financial literacy, take us through briefly on some of the things that they do. Then I will come to the debt exchange issues, which is also linked with the financial literacy that we have in Ghana. Ladies and gentlemen, when we talk about finance, a lot of people are intimidated. They thought it is a complex situation, but financial issues are not understood by any ordinary person. But this is a misconception. This is a misconception. Financial issues can be understood by anyone at any level because we are talking about money. Money is the language that everyone understands. And for that matter, we're supposed to embrace it and know how we try to use it. What then is financial literacy? Financial literacy, we are basically talking about issues that borders on money matters. There are 4 things: debt, budgeting, saving, and investment. Once we are able to understand these 4 issues, debt, budgeting, savings, and investment, it goes a long way for us to have a happy life that we live at all times. When we are talking about financial literacy, we are talking about a situation, the difference between living from paycheck to paycheck. Permit me for the American spelling of check, paycheck to paycheck, as to whether you are building what for your future. That is where financial literacy comes in. There are some people who work, they go and take their salary and then they use their salaries for living. And that is all it is all about for them, without growing the monies that will come for them, without saving, without understanding. In some instances, some people even go and borrow for luxury, borrow for entertainment and all those things. And so, ladies and gentlemen, once we are talking about financial literacy, we are simply talking about how, please, if you are not speaking, can you mute yourself for us? Can we mute ourselves, please? A number of us, our microphones are on. Can you just do us a favor by muting yourself? Just mute yourself. All right, that's good. So financial literacy, we are talking about how we can understand these issues. Now, let me take the pillars of financial literacy one after the other. One of the pillars of financial literacy is debt. And anytime we talk about debt, we are talking about a situation where you are spending money that does not belong to you. Money from the bank through the use of credit cards, through the use of loans, payday loans, or monies that are not for you. And so that is debt. You are spending money that does not belong to you. And people view debt as a negative thing. And for that matter, you see them, for me, I cannot take a loan. I cannot be involved in debt, especially graduate students. When you can take loan to finance your education, you can take loan to go into research. You can take loans to buy computers that you are going to use to facilitate your research work. And so there are good loans and there are bad loans that we have. When we talk about the good debts that we have, this is where you borrow money to accumulate things that are necessary for life. For example, you are taking debt to buy a house. You are taking debt to invest in a business. You are taking debt to ensure that you have quality education. These debts are good debts that we have. But there are debts that we take and they are bad debts right from the beginning. You've gone in for a loan to buy an expensive clothes because you have a party. You've gone in for the money to go and rent an expensive car because you want to impress somebody. You've gone to borrow money to buy an expensive phone. You've borrowed money to go and eat at expensive restaurants. Go for holidays. It's a weekend. I don't have money. So somebody have to borrow you money to go and get those things. These debts are bad. There is the need for us to understand where it comes from. As a country, Ghana, which of the debts do we go in for? Do we go in for debt and we use the money that we borrow to construct roads, bridges, dams, factories, and the rest? Or we go and take the money to pay salaries for people to consume, and that is it. That becomes a bad debt. So for a country perspective, that is it. For individuals, we must also understand what it means for us to understand some of these things that we have. All right. AG, if you cannot see the screen, please go back, log off and come in again. I believe the rest can see the screen. I'm sharing.
Yes, we can see.
Yes, sir.
All right.
Yes, sir.
All right.
Can see.
So, thank you very much. So we need to understand that debt is not something that is very bad. It will be bad when you go and borrow the money and you are not using it for something that will generate. And in finance, we should understand that if you are going for money for an investment, for money for a business, that business must be able to pay for itself. If it is not able to pay for itself, then that becomes a bad debt that you are having, and that will not be too good for us. We must also understand savings. There is the need for us to save money. There are situations where people basically go in and then they save what is left after spending. If you save what is left after spending, it might not be very good for us. What you need to do is that you save something, and what is left after saving is what you spend. So we need to get through that. So savings is not only about, let me spend something after I have spent, I have bought my food and clothing and all those things, paid my bills. Now I am going to save the rest of the money that is left. It might not be very good for us. And so you must also set goals for your savings. Why are you saving? Are you saving to send your kids to the university, to school, pay for a loan on your home, or you want to enjoy life after retirement? There should be goals that we set out for ourselves. We can set goals. Is it an emergency situation? When there's an emergency, if I am sick, if I am unemployed, if there's a critical illness, what do I do? That is where savings come in. That is where insurance comes in. You might want to treat yourself. Yes, you are living your life, and then you might go on a holiday somewhere. Where you want to go on a holiday, then that might be the goal for you trying to put these monies together. And so there is the need for us to understand savings, and you plan for the savings that you want to go into. And you must understand where you are going to save your money that will be saved for you. If you are not able to understand where the money will be and where it is saved, then you are going to have a big challenge. So savings is also very important. There are different ways of doing savings. And as we go through the financial institutions, I'll link up the debt, the savings, the budgeting, and all those things with them as we go along the line. So ladies and gentlemen, can you imagine a situation where this year you've decided that you want to do some savings with the family? Maybe you are married, so you, your wife, and then you have a kid, 3 of you. Each day of your life, each day in the year, you are saving 1 cedi a day. Today is day 46. It means you have 46 times 3. That is the amount of money you have kept aside. Can you imagine that today, yes, you want to send that kid, that baby, to the university. By the time the baby is 18 years and going to the university, you have some amount of money available for that particular person. So you've taken an educational policy with an insurance company for that. And that is for a long-term goal. You have that particular one. You want to build a house for the next 10 years. By 10 years, I should build my house. So you've gone to an insurance company and you've taken the lifetime need policy from this particular insurance company. And you are paying some amount we call an annuity, the same amount over a period of 10 years that will accumulate with interest on it for you after 10 years. You would have taken that amount of money. Yes, there are some that are also, these are savings. We might have critical need for us, sickness and the rest. So we might take insurance policies covering some of them. We have insurance policies from different companies that would relate to retirement, critical illness, unemployment, and all those ones. We could go in for them. They are part of the savings that we make from time to time. You can even form a SUSU group where you are 10 or 20 in the group. You put some amount of money together. At the end of the year, you share it among yourselves and the rest. And so that is about savings. Let's move to budgeting. Budgeting is a life skill of planning and deciding how you use your money, how you manage your money. Every month, how much am I getting? How much am I spending? At the end of the year, what is my total expenses. Once you have that, there are some you know the food, the clothing, and the rest. So they are all part of it. What are your needs and what are your wants? You put down your needs and wants over time. And the economists will tell us that the needs are those things that we need. They are essential for life. So food, water, clothing. So every month, your bills that you are going to pay, your food that you are going to eat, the clothing that you are going to have, you put them down. They are part of the budget. In the budget, you must ensure that your total income is equal to your total expenses, or your total income is more than your expenses. If your expenses are more, what you spend is more than what you receive, then there is danger for you. And this type of budgeting, as we are talking about it, you can have a short-term, medium-term, or long-term budget over time. And you put in whatever money that, if you have the total income exceeding your expenses, what you then do is that you put the rest of the money in savings or whatever investment that you want to go into from time to time. All right. Now, you want me to mute my video, or the rest, you want the rest to mute their videos? Which one? Facilitator, there are some messages there. Okay. So budgeting is also another thing. And today, ladies and gentlemen, we have
Let me listen to this thing tomorrow. I think the
So please, you can continue.
no host, please.
Hello, sir.
okay. Thank you very much. So what we saying here is that we try to understand what money is coming in and what is going out. And there are simple applications that we have on Play Store and the rest that we can use for budgeting purposes. And budgeting is simply how much is coming in, all your sources of revenue. You put all of them together and how much you are spending over time. So financial literacy, we're saying that we need to understand this very well. Then comes investing. Investing is all about creating wealth. You enjoy a secured and a happy future. Putting your money into a business or into a financial instrument, into a property, into a retirement plan, into a mutual fund, so that there will be returns on it for you tomorrow. Investment is that when you are putting your money into a financial instrument, you could put your money in shares, buying shares in company. You could put your money in fixed deposits, treasury bills, bonds, mutual funds, and the rest, so that at the end of the day, you would have some amount of money. Now, the investment that you have will grow over a period of time. The greatest discovery in mathematics is the issue of compound interest, that your interest will earn interest for you on whatever amount that you have. So your original amount will also earn some amount of money. Of course, yes, investments have its own risk associated with it. One thing that we say in investment is that don't put all your eggs in one basket. Do not go and, oh, I want to do investment, and so I am going to buy a taxi. I am going to buy this, when you do not understand the business that you want to do. There is always the need for you to understand the business and estimate how much cash inflow that business is going to bring in. What type of controls are you going to put in place to ensure that your investment is okay? There are some people who would invest in land. They'll go and buy land over a period of time. But that can be a bad investment when you do not do the homework, the search from the Lands Commission to find out whether the land is litigation free or not. And you put your money in there, it becomes a bad investment. If you put your money into government instruments such as bonds and the rest, thinking that government instruments are totally risk-free, they might not be risk-free, as we have witnessed in Ghana, that government instruments are not risk-free. And so debt exchange will come in, haircut will come in, and it affects the investment that you want to do over time. And so these are issues that we need to understand very well and seek financial advice if you don't know about it. That is why we at the School of Business, Department of Finance, we are available. And for graduate students who are on campus, our offices are always open for you. If you want to make these decisions, come around and then we take these decisions with you together. So establishing a business is good, but if you don't have the time to manage that particular business, it might not be very good for you. And so investment is growing your money over a period of time. These are the 4 key areas when it comes to investment, financing, and the rest. Now, let me talk about the financial institutions that we have. The financial institutions that we have. So I am at the Bank of Ghana site. So this is from Bank of Ghana. That talks about Bank of Ghana and financial literacy. As we are talking about savings, investment, budgeting, and the rest, there are a lot of us who do not know where we can get some of these things, and it becomes problematic. There are regulatory authorities that we have in Ghana. In Ghana, we have the Bank of Ghana, we have the National Securities and Exchange Commission, we have the National Pensions Regulatory Authority, and then we have the National Insurance Commission. These are the 4 major institutions that help us. So we have the Bank of Ghana, we have the Securities and Exchange Commission, we have the National Insurance Commission, and then we have the National Pensions Regulatory Authority. These are the 4 institutions that help us. For Bank of Ghana, they regulate all banks that we have. They regulate all the banks that we have. And these banks, what do? They accept deposits from us, they grant us loans, they do investment on our behalf, they do forex trading, they borrow funds, and then they make services on our behalf. So how do you do some of these things with the banks? We have what we call a standing order. So if you want to do investment, you can place a standing order with a bank that this money, pay it into this insurance company. This money, pay it into this particular account for me. The rest that is coming to me, that is the money I am going to spend. That is up. Now we have the savings and loans. They also accept deposits, they grant loans, but then these ones are for a certain category of workers. We have the community and rural banks. Community and rural banks, these are for communities that do not have the other banks that are available to them. And so we have the finance houses, we have the leasing companies, we have the mortgage companies, we have the deposit-taking microfinance institutions. And so these all provide some amount of money that is available for savings and the rest. But ladies and gentlemen, if you want to go with these institutions, you must check their availability on the Bank of Ghana website. whether they have the license. You check the background of those who are managing these institutions. If you are not able to do that, it becomes a huge problem for you when you are going. We have the SUSU collectors, forest bureaus, the credit bureaus, individual money lenders. All of them are regulated by Bank of Ghana. So anyone who accepts money from you and will make it available to you at a point in time, these are regulated by Bank of Ghana. Then we have the other institutions that are governed by the Securities and Exchange Commission. These are fund managers. When we talk about fund managers, they are people who knows where the investment avenues are. And for that matter, they are trained to collect the money and put it in some investment for us. Over time, we have issues with some of them. Some, the work that they are supposed to do, hoping and praying that investments that are done and all the eggs are not put in one basket. They end up putting all the eggs in one basket. Some of us, we have mutual funds, we have trustees, and we have custodians. They've put all our monies in government bonds, which is very wrong. They were supposed to put some money with government bonds, some in treasury bills, some amount of money with shares of companies, some buying insurance, some in properties, and a whole lot of things that we will have. But ladies and gentlemen, we find these fund managers, mutual funds, and the dealers that try to take these monies and they find an avenue of investing in government bonds because the returns that they are getting from it is very high. We have brokers and dealers. Brokers and dealers. Brokers and dealers are those individuals that help us buy and trade with shares on the Ghana Stock Exchange. So those who buy the shares and trade in shares for us on the Ghana Stock Exchange, they are regulated by the Securities and Exchange Commission. And so we can even open accounts with the brokers and the dealers that we have. Then comes the issue of insurance. So we have insurance companies that perform a lot of risk issues. We have the reinsurance companies. We have the insurance companies are the ones that we deal with directly. So they take the premium from us and then they again try to take the risk. The reinsurance companies are the ones that take control over the insurance companies. So the insurance companies also take another form of insurance with the reinsurance companies. Then you have the insurance brokers. Those are entities and individuals that are available that sell insurance on behalf of a number of companies that we have.
It's 19 hours.
Then the insurance agents, they are the individuals, intermediaries that sell on behalf of the insurance brokers or the insurance companies that are available. A lot of us here can take opportunities in becoming insurance agents. You don't need any particular skill, but once you have the marketing skill and you understood the product that is available, you could be making some amount of money. Then you have the micro insurance agents that will also go on. Then we have the National Insurance and National Pensions Regulatory Authority that looks at the pension fund managers. So the pension fund managers, the pension fund custodians, the SNIDs, our first tier, second tier, and third tier pension contributions all go with the National Pensions Regulatory Authority. They will make sure that all the books of accounts are properly kept. You have records of the people that are contributing to your scheme, and these records are available, and you will be able to use them correctly so that when the people are going on retirement, you would be able to get the money and pay these individuals. These pension funds, they are one of the riskiest investments that we do, the law, National Pensions Act, says that these pension funds are not supposed to invest outside the country. Unlike banks that can invest some of their funds outside the country, the National Pensions Regulatory Authority is bound by the law that establishes it, that you cannot invest outside the country. So the largest investor that we have in Ghana, that is SNIT, Social Security and National Insurance Trust, invest all their monies in Ghana. So especially in government bonds and all the rest. Hence, it makes sense that when the organized labor came up, the the finance minister decides to put these people up. Ladies and gentlemen, let me then zoom onto the debt exchange. You will notice that when we started with our presentation, one of the things that we spoke about, let me just go back to it. Yeah, one of the issues that we talk about under financial literacy is debt. Debt is what we spoke about. And one of the issues that we also spoke about is investment. So the debt and investment are coming together now, ladies and gentlemen. That is the situation where government will want to borrow money for business that they want to do. Individuals like you and myself, if we want our monies to grow, we are saying that let us find financial instruments to put our money into. The financial instruments that we want to invest in are basically two, debt instruments or equity instruments. The debt instruments are the bonds, the debentures, the mortgages. They are debt. We want to invest in mortgage. Mortgage is financing for housing. So if you want to invest in mortgage, you want to provide money for housing and the rest, then you are investing in bonds, debentures, loans that you provide. And the bonds are long-term financial instruments that are given to government agencies. Even companies can go in for bond. Unfortunately for us in Ghana, we don't have a lot of government company bonds that are being sold on the market. But we have some amount of investment in cocoa bonds. So we have the cocoa board issuing the bond. That can become a corporate bond that we have in Ghana. The equity investment is where we are talking about investment in companies, where these companies will pay us dividends over the time of that investment. When you invest in, let's say, Ghana oil, gas, GOIL, is listed on the Ghana Stock Exchange. You buy shares in GOIL, and then your share value, the shares in Ghana are issued at no par value. It means that there is no fixed amount of money on the value of the shares that we have on the Ghana Stock Exchange. And so the value can go up and can come. It's floating over time. So you invest in GOIL, maybe you bought 100 shares, GOIL is paying dividend. That is the share of their profit to the members of the company. You become a part owner of GOIL. You take decisions in GOIL. And so they pay you dividend. If at the end of the day, you want your investment back, ladies and gentlemen, you can go to Ghana Stock Exchange and then you sell your shares. When you sell your shares and the price has risen, it means that you have gained. The gain that you have made is what we call the capital gain. Your price can go down. And if your price goes down, then we have a capital loss. That is why sometimes we can say that Dangote had received so much amount of money on his investment, or has lost so much amount of money on the Ghana Stock Exchange. That is investment. Now, when you invest in government bonds, it becomes debt investment. When you invest in treasury bills, So the treasury bills, we have the 91-day, we have the 182-day, and we have the 1-year notes. That is a debt investment. And so when you do this investment, government has borrowed from the domestic market and from the external market to finance budget expenditure. Now, this debt over time, the interest rate, the first Eurobond, if we finish this, you can check Ghana's first Eurobond on the internet. The first Eurobond that we got as a country brought in $2 billion. The interest on that Eurobond for 10 years was 7.6%. We had another tranche that is for 30 years. The interest was 8.6%. And when you buy bonds, the interest on the bond is what we call the coupon. The coupon is the interest that will be paid to you every year. For all types of investment, the rates are quoted per annum per year. We must note that all the rates on this investment are quoted per year. So on annually basis. So the coupons are paid every year. If it is semi-annual, it means twice in a year. If it is quarterly, it means every quarter they will pay you interest. So if you are buying bond and it is per annum and payment is per annum, it means you receive it once a year. Government recently is saying that they are going to pay the bond semi-annually. So the finance minister says semi-annually, so that every 6 months you receive the coupon that you have. And then the interest rate is the coupon rate. The bonds are long-term investments. The first Euro bond that we had was for 10 years. Then that same year, we had 30 years. So bonds are long-term investments that we have. That span over a period of more than 2 years. So you have 5 years, 10 years, 20 years, 30 years bond. And individuals currently are having these bonds that we have. And ladies and gentlemen, you realize that when we started this presentation, I said that budgeting is very key. Budgeting is very key in such a way that the monies that you receive must be more than the monies that you pay out. Every year, our government of Ghana will spend more than what we receive. If we spend more than what we receive, that becomes a problem. There is a vacuum. That vacuum, that excess amount of money have to be catered for. In catering for that, we try to go in for bonds, that is loans, from individuals that we have. It's what we call the domestic debt. From those who are outside the country is what we call the external debt. And we take this amount to sponsor consumption. And all the time we're saying that, yes, you want to save. Savings you want to do, you must put some amount of money, but you don't even go for example, debt, go and borrow for consumption, for extravagant life that you want to live. If you do that, you are going to find yourself in trouble. Ladies and gentlemen, that is where we find ourselves as a country. We've borrowed money. The monies that are borrowed are not invested so much into our educational sector, into our hospitals, into agriculture, into factories that we have, but these monies are borrowed for expensive life of the Ghanaian. We have a lot of ministers that we borrow money to pay. And so these monies that we borrow, it became very serious that we are unable to foot the coupon payment over time because our production, our revenue generation are not enough to pay for this amount of money that we have. And hence, there is any time you want to pay off the money that we've borrowed, we have to go and borrow money to pay. So every year, government upon government, they go and borrow money to pay debt. And when you go and borrow money and you are using it to pay debt, you are going to be indebted. So we have moved from 7.6%. That was the lowest interest coupon rate in the world at that time, to 19.2%, to 30% over time. And making this payment becomes very difficult. So if I'm borrowing money to you and you come to borrow from me to pay me again, then I become suspicious. Hence, the international market was locked out on Ghana. We cannot go and borrow money again to pay. If we cannot go and borrow money again to pay our debts, we have an issue. If you have that issue, you must now go and look for a cheaper way of borrowing money. Hence the need to go to IMF. When we went to IMF to borrow, the highest interest rate IMF can give us on the 3 billion that we are seeking for is 3%. That's the highest interest rate IMF can give us. That's 3%. So it is cheaper taking the loan from IMF. But IMF is saying that your debt portfolio is too high. It is too much. If you add this one to it, it's unsustainable. So they did the debt sustainability analysis. And the debt sustainability analysis says that we cannot give you this 3 billion. It means that you might even crash. You know, when you are borrowing so much and it becomes an issue for you, you might commit suicide. So if care is not taken and you don't control what you are doing now, you are going to be in trouble. Then comes the debt restructuring, what we call the domestic debt exchange. So you have gone in for the bonds that will mature in 5 years, that will mature in 10 years, with a coupon rate of, let's say, 19%. Government is saying that, look, where we find ourselves, and you notice that we have the rating agencies downgrading Ghana. Even today, there was a downgrade because you have defaulted. You have not paid the coupons the day of the maturity of the bonds. You have defaulted. And so you would reach a stage, your production is not enough to pay. If you go to some government agencies that some of us are working in, you realize that payments are made from internally generated funds, and government has not been able to pay salaries for some time now. And so there is a huge burden. Hence, there is the need for you to go to those who have borrowed the money to you, to plead with them, talk with them, that look, whatever that is happening, there is the need for us to sit down and see how we can come out of the crisis that we find ourselves, because we cannot pay you the 19% on a 20-year bond. That is so much. So calculate 19% on about 100,000 somebody has invested. The person is getting 19,000 every year. 19,000 every year. There are people who have received coupons this month on their bonds, and some have received as much as 25,000. So it's a way of secured for them. They are getting their money. So government is now saying that, look, we have a difficulty. Let's reduce your rate from 19% to about 9% now. Let's reduce your rate from 30% to about 15%. When you are reducing that rate, then it becomes a haircut. Your day of maturity is fast approaching. You are supposed to pay me in 5 years. Government is saying that extend the period for me. The extension of that period then brings in the debt extension. And that in itself, when inflation is over 50%, it eats into your money. So your principal will no longer be enough for you to do the things you want to do. And hence that amount can also reduce. That is a haircut. So then we have the debt exchange. That is debt for debt exchange. So we are giving you new instruments with new terms altogether. If government of Ghana has investment in companies, they would have done debt for equity exchange, where they will tell you, you are now a part owner of this company, but we don't have that one. So they did the debt for debt exchange. That is where we have. But then the problem is that communicating this thing to the investors, for them to understand, government uses different approach. The strategy was not good. There are different components of the domestic debt exchange that we have, the domestic debt of Ghana. We have the institutional, the pensions, the banks, the insurance companies, the microfinance institutions, and all of them. We have the individuals in Ghana who are part. We have the pensioners who are part. So when the issue came up, some of us raised issues about why do you have to exclude the individual bondholders? And then they came in and included them. Hence, we have the issue. The pensioners, I want to talk about the pensioners and then I'll open up for questions. The pensioners are vulnerable. They are our senior citizens. These are people who have worked their entire life. Unfortunately, for some of them, they were not properly advised. And hence, they put all their retirement benefits in bonds. When you get old, your situation changes. And hence, you have ailments that you have to cater for. If we are able to exempt the individual bondholders, then we can, institutional bondholders such as pension, the pensioners can also be exempted. But we have a complexity in that place where some of them have voluntarily subscribed to the bond exchange. Then it becomes difficult to exchange their bonds. Hence, government is not willing to say that we have exempted you from this particular policy. Then for that matter, stop picketing. You receive your coupon and the day of maturity, your principal will be given to you. Ladies and gentlemen, thank you so much for listening to this short financial literacy. I believe that it has made an impact and you've learned a lot from it, and that will change us on the decisions that we make from time to time. Coordinator, you can take up from there.
Thank you very much, sir. We are super grateful for the insights you have given us on the first topic, financial literacy and debt exchange in Ghana. We would open up for questions. We mentioned that we would have 10 minutes for questions. And this is how it's going to be like. You would have to indicate by a show of hand. And please wait until you have been called to ask your question before you go ahead to speak. The next thing is that please mute your microphones if you have not been called to speak. We are taking them in batches. We are taking the first 3, and then we get answers. Then we take the next batch of 3. Thank you very much.
Mazis, before you come in, I think there are some few questions in the comment section. Let me just address them. Someone is asking, how can I have access to government bonds and where? In this current economic crisis in Ghana, is it advisable to engage in government bonds? You can get government bonds from any bank. All banks, pension funds, some of them go and buy it and then they retail the bond. So any bank can do that. In this crisis, ladies and gentlemen, it is risky. I will not be the person that will say that the bond is very risky. If you want to go and buy the bond and it will be exchanged for you, the rate is not certain, then you can decide to go and do that. But what is happening to our elderly people, you must decide to advise yourself whether you go in for it or not. Thank you very much.
Thank you very much, sir. So we would want to call on Martin Akrofi. Kindly ask your question. Hello, Martin. Kindly ask your question, Martin. If Martin is not ready, let's call on Komi Walanyo. Sir Wallace, please ask your question.
Okay, we are waiting for them, somebody is asking under the comment section whether treasury bills are safe now. The answer is yes, treasury bills are safe. They are not part of it. And in fact, the greatest error government of Ghana would do is to touch the treasury bills as it is now, because that's the only way they can raise money. So for now, it is very safe and okay for people to buy treasury bill.
Thank you, sir. Martin, if you can hear me, kindly ask your question.
Yeah. Hello. Hello.
Hello,
Hello.
Martin, we can hear you.
Yeah. So, okay. So, I want to ask. Will the slide be made available to us? And my second question is concerning the debt exchange. Some of them are making a case that their fund managers did not inform them and they have went for the debt exchange. In these circumstances, is there a need for the fund managers to inform the investors before? Hello.
Martin, continue.
Hello,
we can
sir.
hear you.
Yeah. So, my question is some of the investors are complaining that their fund manager did not inform them before they went for the debt exchange, and I'm asking, is there any need for the fund managers to inform the investors before they all went for that? Thank you, sir.
Okay, can I ask my question now?
Hello, Wallace.
Yes, sir.
Yeah, you can go ahead and ask your question.
Okay. Thank you, Prof, for giving us such an important lesson. I think my first question and the second has been tackled. And the third question I want to ask is that since the government bond is not safe for us to invest it in now, is there any other thing that any other bond or any investment that we can put our monies in? And is the government going to come up with anything that is also going to tackle the other investments? Thank you.
Okay, we are taking the last one from Veronica in team. Vero, please, you can go ahead and ask your question.
Yes, thank you very much. I think Sir Wallace asked a portion of my question as to where we can invest now, or better still, which products or services which we can effectively put our monies into. Thank you.
Thank you very much. So, sir will address these three questions, and then we take the next batch of questions.
All right, thank you very much. The slides, I'll make it available to the executives so that they can make it available to you. So when you come, they have a way of sharing with you, so that will happen. For the fund managers who have not contacted their members, their people before they do, the question is it advisable for them to take decisions on their behalf? That is an error. It's about corporate governance. I have opened an account with you and you are managing their money on my behalf. So you act on my instruction. And so if you bought bonds and then there is going to be an exchange, you are supposed to inform me. Failure to inform me means that you have not acted according to my instructions, and hence they have faulted in that particular regard. And those who were angry with them have every right to do so. But I'm sure the fund managers have gone back. They were also not informed very well before they signed onto it. As we have with the banks have informed their investors, and their investors have agreed that they should go into the entire debt exchange. Let me say here that the debt exchange in itself has been in secrecy for some time. Information about it is not open until we push government to come out with what they really wanted to do. The question about other investments that are available that we can put our monies into. Treasury bill is there. People can invest in businesses that they have interest in. You can partner with others who are already in some form of business and they need capital to operate. So you can put your money with them. You can also try to invest in land. You can buy some land that is litigation free. You put your money in there. Over time, it might grow. You might also go into agriculture. You might decide to go into transportation. But ladies and gentlemen, it's not about me mentioning this investment or that investment. Every investment that you want to do have a goal, as an objective. You must decide which one you are going in for. So if I want to regular returns on my investment and I have a target for 5 years, I can go in for what we call the insurance investment. The insurance investment is where you take the investment policy and then you pay a fixed amount of money over a period of time, and that money will generate interest. And over 10 years, you might go in for your money. If you are saving towards retirement, there are fund managers that are involved with retirement planning. And so you contact them and do the retirement planning. If you want to invest for your child education, then you take an insurance policy we call the Educare. That comes with investment component. When you are no longer there, the insurance company will take over all these things that they have so that your child can go. So based on your goal, based on your risk appetite, and the amount of disposable income that is available for you to spend, then you decide where you are going to invest your money. I think I've addressed the questions now.
Thank you very much, sir. We would have to take the last batch of questions. And so I would ask Idris to ask his question. Idris.
Thank you very much for the opportunity. I think I have two questions. The first one is that looking at the population of Ghana, we have some Muslims in the country, and that most Muslims don't believe in the banking system and other financial instruments offered by the banks and other financial institutions. So is it not advisable, or would it be bad for the country to opt for Islamic finance as part of their financial system? And then the second one is that if banks have the opportunity to invest with the government of Ghana in terms of buying bonds and other things, and if they are subscribed to the debt exchange, then is it safe now to be saving with the banks? Because I understand that the savers' money that they also invest in other avenues for other income.
Okay, thank you very much.
So we'll take the next question from McLean. McLean, can we get your question, please?
Yeah. Hello, good evening. Thanks for the opportunity. Doc, I would like to find out about the debt exchange regarding that of pensioners. Their investment, was it an individual investment, And if it was an individual investment, I understand there was an opportunity given that you could opt out of it. What happened that they couldn't use that opportunity to perhaps opt out from the debt exchange program?
Okay.
And now they have to picket at the finance ministry demanding that they are exempted. All that option was taken out. The option of maybe opting out was taken out from them. I want to understand that aspect of it.
Okay.
Thank you.
Hello, sir.
Yes,
I think
sir.
there are two more hands up. Permit
Okay.
me to take them, and then we can
All right.
take the ones in the chat box.
All right. Okay.
So Dinah, please, your hand is up. So ask your question, and then let's get to the next one.
Thank you. My question is on this insurance policies. I don't know whether also the haircut is affecting the insurance line. Some of us have our insurance policies with Star Life, SIC's Glyco. So I would like to know whether the debt exchange is affecting it. Thank you.
Al Hassan Isa, your hand is up. Can we get your question, please?
Yeah, hello.
Yes,
Can you
sir.
hear me, please?
Yes, sir.
Yeah. I want to find out based on what from the lecture he said that for now the treasury bills are safe. So I want to know if one want to invest in the treasury bills. I want to invest, let's say 1 year. Is it good you go in for 1 year exactly, or you can go in for 6 months and then later you enroll it with the interest they're going to give you? Please, I just want clarification on this.
All right.
Thank you.
Thank you.
We are taking the last one from Annie Beg. Annie Beg. If Annie Beg is not ready, Enoch Amo, can we hear from you, please?
Can you hear me?
Yes,
Hello?
we can hear you, Annie Beg.
Yeah, so it's not actually a question. It's in response to the gentleman that stated that most of the fund managers didn't inform investors before tendering in their bonds for the debt exchange. I happen to work with one of the fund asset management firms. And so before we tendered in the bonds, we sent out notices to most of our clients. And then even for you to tender in, you would need the signature of the client. Hello?
Yeah, we are listening.
Yes, for you to tender in the bond on behalf of a client, you need the consent and then a signature of the client. And so most of the clients rejected the offer because government gave the option that they could opt out. It's only a few of them that gave us the go ahead to tender in the bonds. So what I can say is that most of the fund managers sent out notices, and then we have a few, most of them rejected. Thank you.
All right. Thank you very much. I think that the question was in response to the earlier communications that came with the confusions that arise. So the clarification is well noted. Now, can I go with the questions? One, the debt exchange with the insurance policy, insurance companies, all insurance companies, banks, and the rest are all having investment with the bonds, but not majority of their investment in the bond. So they will be affected one way or the other. But that does not actually affect your insurance policies that you have taken with these institutions. And so you will not actually be affected. In actual fact, last month, I went to make withdrawals, and within some 3 days, the money was credited to my account. Most of the insurance companies are paying premiums on their benefits that are due. They are paying it. So there is no need for us to rush not to take our insurance policies from time to time. Then, is it safe to save with a bank? Looking at the debt exchange, just as I have said for insurance, the same thing applies to the banking sector. This is a sector that is very critical. If you understand how it operates, ladies and gentlemen, we cannot allow this sector to go down. The banking sector and other institutions have the financial stabilization fund that has been established. Bank of Ghana has its own funds that are also there. These are supposed to ensure that the savings for other individuals are also catered for. And so we need to continue doing business with these sectors from time to time. If you want to buy treasury bill, the 1 year note, the 91-day note, and then the 182 days instruments that are available. Ladies and gentlemen, it depends on the interest rates that are available for you. But looking at this current economic situation we find ourselves in, I would advise that you go in for 3 months and you can roll over the principal and the investment over that particular period. Now, there is a question that says that, yes, the population of Ghanaians, we have the Muslims that are also there, and most of the Muslims do not believe in banking. And then the question contradicted itself by saying that, is it not good for us to look at Islamic banking? Yes, it means that Muslims believe in banking. They work with the banks. Then we have the Islamic banking coming in. And the belief of the Islamic bank is that you have to make money, but you don't have to pay interest on that money. So most of the Islamic banks that operate, they actually they give out loans, but they have different ways of financing these loans to make sure that the money is available, you pay back, and then you make it available to other people. This is the time for Ghana to adapt the Islamic banking principle, but that cannot be done in a vacuum. There is the need for us to have education on how the Islamic banking operates, so that we don't have people infiltrating into the Islamic banking perspective and destroying that noble area of banking. So we need to look out for that. Now, we also have a question on the pensioners. Is it not voluntary for them to do it? Was that option taken away from them? Why are they picketing? Yes, it was voluntary for them. And as we speak, the issue from the finance ministry, and this afternoon when the finance minister spoke with them, he still maintained that it was voluntary. What it means is that when their coupon is due, they'll be able to pay for it. What it means that when their principal is due, they'll be able to pay for it. Now, most of them have their bonds that spans more than 5 years. So some have it 10 years bond, but they've moved all the bonds to 5 years for them. And they can have received their money, but at a lower interest rate. But for the sake of a higher interest rate, most of them opted. We were told that they have about 16.5% of the pensioners who opted for the new system. Their fear, and confirmed by the finance minister, is that if you do not exempt us and something happened tomorrow, what happens to our investment? The new bonds can be tradable. The old ones are really not in the system. So you have to hold the bond until the time of maturity. Then we have Lydia. Can you mute yourself? Lydia, can you mute yourself? So budgeting is how much that is coming in, how much that is going out. Where do I put the difference? That is basically about budgeting. You can consider other factors. And when you are doing budgeting, ladies and gentlemen, don't do it alone. It's a household, involve the household. If you are married, husband and wife and children to come together and prepare their own budget. When you prepare the budget, and the kids know how much is there, they will know how to live. If they don't know how much you are making, and in fact, some of our kids think that when you go to the bank, you just put a card in the machine and money comes out. We need to explain to them. And once we do, the kids' school fees, their books and the rest, when we put it together, we will be able to manage. And that is where you will know where you are going to buy certain things for the house and you postpone some of them. Thank you very much, ladies and gentlemen.
Thank you very much, sir. We wouldn't want to, because of time, we don't want to take any more questions, but is it possible that we can get your contact, assuming some of our colleagues or our friends would want to reach you, either on
All
your
right,
social media
so
handles?
you can get my contact. You can get my contact, but when you call me, you may not get me. You have to send me a message on it. So 020 8935 839. So in fact, let me put it in the chat for us to see. 020 8935 839. And my email is skawo@ucc.edu.gh. skawo@ucc.edu.gh. We are graduate students, and let's make good use of the time that we have here together. Thank you all for the time.
Thank you so much, Doug. So on behalf of the Association Grasag-Ucc, we want to express our hearty appreciation to you for impacting us this evening. We are so much grateful, sir.
Thank you very much, my brother. God bless you. And I'm very sure you are going to enjoy Prof. Sian as he comes to take over. So, Prof, good evening. You are welcome. I'm handing over to you.
Good evening, my brother, and thank you.
You're welcome, Prof.
So I want to use this opportunity to welcome those who joined midway. You are welcome to this edition of one of our capacity building programs, which has been organized by Grasag-Ucc, led by Achiri Adam, His Excellency, to ensure that at least every Grasag member has been built on every angle or every side holistically. And this is financial literacy. We have just had a first talk from Mr. Seriam Kawo, and the first topic was on financial literacy and debt exchange in Ghana. So if you are from Code or you are a sandwich member or even an undergrad member and you have joined, you are welcome. We are about to start the second presentation, and permit me to say something small about our next presenter. Our next presenter is an associate professor in finance at the Department of Finance, School of Business at the College of Humanities and Legal Studies. He joined the university as an assistant lecturer in September 2003. Prior to that, he was a teaching assistant with the then Department of Business Studies from 1997 to 1998. That should tell you something, right? Prof, he was a vice dean of the School of Business from August 2015 to July 2019. And prior to that, he was the head Department of Accounting and Finance from August 2014 to July 2016, and August 2009 to September 2010. Currently, Prof is the head of the Department of Business Studies, College of Distance Education. He has research and publications. His interest or area of interest are financial inclusion, financial literacy, and financial planning, small business finance, and working capital management. His teaching interest is in the areas of financial management, investment management, corporate finance, international finance, and strategic leadership. He has served on a number of boards within the university and outside the university. He's a board member of Konfanochi Rural Bank, Sedat Consort Limited, and Loyalty Insurance Company Limited. And his academic qualification include PhD, which he had in Kenya, Master of Business in Finance and Diploma for Graduate, which he had in New Zealand, Bachelor of Commerce here in Ghana, and Diploma in Education here in Ghana. And he's a member of International Council of Small Business. Please help me to welcome Professor Sian Frimpong as he takes us through managing your finance in times of economic crisis. You are welcome, Prof.
Thank you very much.
And good evening to you.
Good evening to all those who are here tonight for us to have this discussion.
Good evening.
I'm not going to make PowerPoint presentation, but I'm going to speak to some issues and maybe later Hello, please, can you hear me?
Prof, we can hear you now.
All right, thank you very much for the opportunity to be here today to speak with you. I'm not making PowerPoint presentation, but I'll speak to issues, and I believe that at the end of the day, we will all get something. Maybe later on, I can pass on some tips to you for us to consider. Mr. Kawo has done a lot of the talk, making use of the time that has been given. He has touched on most of the things that I also wanted to discuss, and therefore I will skip some of them. When we talk of financial crisis, the financial sector cleanup that we had about 2 years or so ago, the COVID-19 pandemic, now we talk of Russia-Ukraine war, all these things have brought about certain financial situations that we can say are financial crisis. And sometimes when you think about these things, actually, if you have lived with people who have gone through financial crisis in one way or the other, you tend to understand better. When you live with people who were working yesterday, they wake up today, and there is no job for them. When you engage them, you really recognize the effect of having financial crisis. So the thought of being hit with major negative events that can affect our finances, such as losing our jobs, illness, accidents, pandemics, can keep us awake in the night. Because when you think about it, particularly if you have experienced that, then you realize that it's not a small thing. However, there are certain things we can put in place to ensure that we are able to manage the situation very well. And therefore, I'm going to talk about certain things we may need to do so that we prepare for such crisis. When you read about personal finance, it talks about certain things we ought to do. And as we go along, we may be looking at some of these things. The first thing I want to talk about is we have to maximize our liquid savings. Mr. Kawo talked about savings. When we talk of savings, it's not about trying to leave the leftovers. Savings is a deliberate thing that we ought to do. If you are working, one best way to save is to, for instance, ask your bank to deduct a particular amount every year. Either you put it in an investment, you put it in a special account, because no matter how much you earn, if you do not save deliberately and you decide that I'm going to save the leftover, it will never happen. Because at the end of the day, every amount that you receive may come with its own expenses. So you may have to get liquid savings, such as cash account, either current or savings account or fixed deposits, sometimes short-term government investments that can easily be converted into cash. These are going to help you very much in times of crisis, because you may want to turn these short-term investment, for instance, into physical cash when the need arises. And this means that from time to time, you have to put some monies aside. If you are going to maximize your liquid savings, don't invest in stocks or high risk investments, such as bonds, such as stocks, until you have made maybe several months of savings with enough cash at your disposal to ensure that if you have excess funds, you can put some in those assets that are not that liquid. Because the idea of having liquid savings is to ensure that as soon as something happens, you can fall on it and you not be in crisis, especially in the short period. Number two, make a budget. I think Mr. Coward talked about budget, so I may not dive much into it. But when we talk of budget, what does it entail? It talks about your inflows and outflows. You should know how much you earn each month and how much will be going out of your earnings each month. How much money you may need for emergency funds. Because if you're not keeping a budget, you may have no idea even about how much you are spending now and whether you are living below or above your income. So you ought to have a small budget. Sometimes, I mean, we all mention it, but in practice it's tough to do, but at least keep track of things that you buy. And once sometimes you sit behind and ask yourself, what did I spend my monies on and all that, you'll be able to realize that, hey, it's not always worthy to spend money on some other things that I do. The next point is that we ought to prepare to minimize our monthly bills. In times of crisis, there are certain things that we may need to cut down. And therefore, looking at your budget to see whether you might currently be spending more money than necessary will help you to know where you need to cut down. And remember, when we are in financial crisis, it's very, very important to be knowing things we are spending our monies on and then how to cut down. For instance, you may be able to trim your utility bills by making sure that you manage electricity, the way you waste water is reduced. You may even look at your insurance policies and see whether you may have to take lower insurance policies like third parties for cars that, for instance, are always being used for internal runs and all that. So you may have to look at how you cut down or minimize your bill. Then you may also need to manage your bills, especially if you are in financial crisis. For instance, you've lost your job. You may have to look at how your bills are paid simply by making sure that you save a lot of money by, for instance, paying your bills on time to avoid, in some places, you may be asked to pay a penalty if you pay or if you do not pay on time. So you may have to look at all those things. You may also need to take stock of your non-cash assets and see how you can maximize their value. What are non-cash assets? There are certain things, certain items we may think that they are not cash, but at the end of the day, to us financial people, we believe that everything collapses into cash. Why should I have, for instance, extra food in my house that will go waste? Why can't I cut down on my groceries? Why can't I cut down on the food that I cook? That every day we have leftovers and we throw them away. So we may have to look at some of the things that we may spend money on and that are not all that necessary, and then cut down. One thing we should also know that is becoming, gradually is getting to our society is the use of credit cards. And credit card debts are becoming a major problem. In developed countries, they are major crisis. Sometimes people put themselves so much in debt that at the end of the day, when they receive their monthly salary, majority of such amounts are taken by credit card companies. So either you make it a point to pay your credit card debts to reduce your monthly financial obligations, or better still, don't even go in for that. Use debit card. For that one, if you don't have money on it, you don't have money. And at the end of the day, you will save yourself. We should also look at ways to make extra income. Sometimes we can make extra income by taking on additional jobs. Sometimes people can babysit for others. You can do second job. In Ghana, it's not that common, but elsewhere you can take on second job. And all these things may earn us something. So If, for instance, we are in a community where we can even have a small shop, something that will give us extra income during our free time, instead of roaming about doing things that may not be necessary, may think about taking such jobs to get extra income. When it comes to managing your finances, one thing we need to do is to assess our financial starting point. Where do we get our monies from? Take a look at how you are going to earn your income. Take a look at the debts that you have to pay and strike a balance. And once you understand the sources of funds and the debt you have to pay, at least it's a starting point. It will help you to sit down and ask yourself, how do I plan such that I'll be able to have maximum amount so that in times of crisis, I'll be able to meet my needs. When you are in financial crisis, for instance, if you have lost your job, illness or something, accident has come in, the best option for you to do is to cut down on your expenses. At this level, you should definitely know that your income might have reduced considerably. And therefore, there may be the need to cut down on your spending. If you were going to the pub every Friday to enjoy yourself 2 bottles of beer, you go out with friends and all that, in times of crisis, you may have to cut down and actually look at spending your money on necessities, not on things that are not necessary. How do we cut down on some of these things, our expenses? We may have to look at about our utilities. I talked about that earlier. Sometimes you wake up, you go to your children's rooms, the lights are on, the fans are on, nobody is in the room. So you can make it a duty to check up on those things and make sure that you reduce electricity bills by cutting down on things that are unnecessary. You ought to plan your food, your meals, and cut down on food delivery. Shop around and compare prices. In Ghana, we may not have that opportunity of even looking at, for instance, electricity. Elsewhere, we have 3, 4 electricity companies all providing you with power. It doesn't mean that if I switch from A to B, I'll have to go and rewire my house. It's just a matter of calling my existing provider and say that I'm no longer interested in your service. Then you switch. So you can do that. When we are preparing for crisis, we need to set up our savings goals. And these goals can be short-term, they can be long-term. If we are looking at short-term, we are looking between 3 to 6 months. Research has shown that ideally, we need to prepare for savings to the tune of 3 to 6 months of our salaries in our emergency savings account. So if I earn 10,000, I will need between 30 to 60,000 in that account. And the reason is that it is assumed that if I lose my job now, I should be able to stay between 3 to 6 months in search of another job. So we may have short-term goals, and then we may also have long-term goals by saving towards spending in the future. That one beyond 1 year. For instance, I may specify my goals to include saving for my retirement, saving to pay my student loans, paying off my mortgage, saving to get money for my children's education. So all these things will be necessary so that you'll be able to save enough towards crisis if they so happen. If we have not started savings, and I know most of you may not be working and therefore we've not done that, the best time to prepare for retirement is the first day we get our job. Some even prepare for retirement before getting their jobs. You may be fortunate to have a parent who give you periodic income. A friend of mine was giving the daughter 3,000 Ghana cedis a month as a student. And I asked her whether she's managed to save anything. And said, Prof, as you know, as students, and I said, we have people who are not earning 3,000 in Ghana, and they are still preparing for retirement. So if you are fortunate to get a parent who is supporting your education and giving you money that you really believe you can live on and have some extra savings, start preparing towards your retirement. It's very, very important because whether we like it or not, we will retire. And when we retire, sometimes our salaries reduce as much as 60%. Even in Ghana, you may be earning about 20% of the money you were earning when you went on retirement. So what do? We need to prepare for our retirement as early as possible. The next thing I want us to look at is, and some people have been asking me these questions, is it worth investing in times of crisis? In other words, should I invest when we are in crisis? A lot of people want to go and collect their monies because of the economic crisis that we face in the bond issues and all that. But the question we need to ask ourselves is, if you genuinely don't have another investment, something you are going to do with your money, why do you go for it? At the end of the day, it's possible that the crisis will be over, and if you have gone for all your monies, and once you have money in your hands, you spend it anyhow, whether you like it or not. You are not thinking about buying that clothes, that shoe, that suit, that dress. But once the money is there and the eyes see that, you definitely buy. So you may pick the money and waste it. And therefore, it's very, very important that even in times of crisis, you have to invest. So what are the areas I need to invest during crisis? When market falls, sometimes the best response or the first response of many investors is to try to bail out in order to stop the pain of losing their money. They do so by selling their stocks. But if you do not really have another investment for that money, I would advise that if you have stocks, leave them. Because research has shown that whenever there's recession, there will be a bounce back. So in terms of recession, you may want to consider stock funds or mutual funds, as we call them here. Mutual funds are good because of the fact that it's contribution from many people. And at the end of the day, they invest in so many stocks that even when some are not performing, others will do. So you end up getting a well-diversified investment, though you don't have enough money to do that yourself. So you may have to look at that type of assets. Another thing we should also note is that when we talk of investment, most often our minds go to what we call financial assets, T-bills, bonds, stocks. These are not the only assets that we have or only investment that we have. What you are doing now, spending your time, money, and resources to educate yourself is an investment. So you may invest in your education as a type of investment. You may also want to invest in real assets, estates, farming, land. These are very, very important assets, gold or other mineral resources. So if you're thinking about investments, you may also look at that. So look at investment that are safe. Now, one issue that the other time I was telling students whether now we can call bonds safe assets in Ghana is the fact that when people put their investments in bonds, now most of them have been found in a very bad situation. So we may try to avoid high risk as assets during recession. When we are investing, we should not put our emotions in an investment. Emotions simply means that as soon as we hear there is this problem, we disinvest, sell our investment and move them from one investment asset to another. No, we should put our emotions aside and stick with our long-term plan. If my plan is to invest in a particular asset over a period of time, no matter the crisis, as I said earlier, with financial or securities market crisis come, they don't last forever, and therefore things may be better. So stick with your long-term plan. We need to have an emergency fund because we don't know when emergency may strike. We have to stop watching the markets. Markets are volatile. They swing up and down. And therefore, if you are always concentrating on the market, things may not seem good to us. We should also remember that historically, there are more good years than bad years. And therefore, it is believed that no matter the situation, you will definitely make investment better. So I want to end my discussion by saying that the best defense is to ensure that you are prepared when even the crisis have not started, by being disciplined with your money. One philosopher said that when it comes to issues of money, nobody can teach you how you should be disciplined when it comes to issues about money, because we cannot learn issues about money from the classroom. And therefore, doing well with money has little to do with how brilliant or how smart we are, but it has everything to do with our attitude. And attitudes are very difficult to teach. Thank you very much for your attention.
Thank you very much, Prof. We are grateful for this presentation. As I stated early on, we would have the questions. What we'll do is that we'll take them in batches. We'll take the first three, then we get answers to them, and we'll take the next batch. But permit me to acknowledge the head of accounting department, School of Business UCC, Reverend George Taki. So we are grateful that you have joined this conversation. Thank you so much. And we also want to acknowledge the presence of Professor Mrs. Sarah Dakwa. She is the Dean of Graduate Studies, UCC. We are grateful for your time, Dean. So we would go on the question. Prof, we have 2 questions in the chat box.
All right.
We would want to find out if you could take them quickly, then we take the other set of questions. Thank you.
All right. Is it about I don't know whether, let me see.
So
Is it about
the first question is saying that, is it good to invest in cryptocurrency?
Okay. Is it good to invest in cryptocurrency? Cryptocurrency is something that, well, is a new phenomenon, something that is evolving. In fact, I had a presentation with a lady in Cape Coast Teaching Hospital, and she's so much involved in cryptocurrency. In finance, one thing that we advise people on is that if you are going to invest, you have to invest in assets that you understand how it operates, or get somebody who understands your investment and manage it for you. Personally, I'm not interested in cryptocurrency, and therefore I don't want to advise people to go into it. But if you have a good appetite for risky investments, then I can say that you can make your choice by looking at what is it. But before you go in place, make sure that you really, really read about it, understand it, and know what you are about. In fact, one of my teaching assistants who works with Bank of America Merrill Lynch, Alex, has always been telling me that is the best investment you can do, but I've always told him that I am not interested because I don't have much knowledge. It's too volatile for me, actually, because today it can increase by 20, 15%. Next day, it has reduced. All your monies you invested in is gone and all that. I don't have heart for such things, and therefore I'm not going for it. Thank you.
Thank you very much, Prof. So we'll go on to the next set of questions. Mr. Thomas Obo Bamford Jr., your hand is up. Kindly ask a question, sir.
Hello, good evening. Thank you very much. Sorry for the delay. Please, thanks for the opportunity to. My question has to do with the same investment with respect to forex. I wanted to know how reliable that one could also be. Thank you very much.
Prof, it seems that's the only question that we have, or that's the only hand that was up. So if you can kindly answer him, then we wait for the next set of questions. Thank you. So colleagues, if you want to ask a question, kindly indicate by a show of hand, or you can send your question through the chat box. Then we can get it read to Professor. Prof, so the first question.
Hello, please. Can you hear me?
Hello, Prof, we can hear you.
All right. I'm saying that forex account or trading is where I buy foreign exchange, like the dollar, the euro, the pounds, and keep them so that maybe in future I'll sell. If you look at our situation in Ghana now, it may look good because the cedi always depreciates against the dollar. But if you are going to use that as a business, in my view, you may need to get a very big amount of capital. Yes, now the exchange rate may be volatile, but if the exchange rate stabilizes, that may not be the best option because you may be in a position to invest your money elsewhere and make good returns other than forex. But as at now, I must say that somebody, for instance, who even bought dollars at the beginning of the year might be making about 2 to 3 cedis per dollar, and that may be good investment. So if you have the money, perhaps as we find ourselves, it may be a good investment.
Hello, Prof.
Yes, please.
So there's a question in the chat box.
Yes.
And it reads, it's from Sewalas. I have invested in animal farming in the northern region, and I would like to know whether it's a long-term or short-term, and please, in any of them, how is it contributing to investment?
When we talk of investments, we have different types of investment, as I mentioned earlier. We have investment in financial assets. Financial assets are paper assets. If I buy stock, if I buy treasury bills, I get certificates indicating that I've invested this much in those ventures, or it can be in real assets. So somebody investing in animals like cows, goats, or sheep is real assets. Because, I mean, if the person takes you to the north now, and the person says that I have 10 cows, you can see and count 10 cows. So it's investment. Somebody may decide to invest in their education. It's an investment. That one, they are intangible. I wonder if we can split the brain of a person and see what is inside. But at the end of the day, I mean, we all know that education pays more than some of the physical investment that we do. So they are also investment. So yes, investing in animals is an investment. Investing in farms is an investment. Land, estates, precious stones. In Ghana, we don't even value artwork that much, but in some developed countries, investment in those artworks runs into millions of dollars. So yes, investing in animals is an investment.
Thank you, bro. Master Eric Kujo, your hand is up. Can we get your question, please?
Before Kujo comes in, I see a question here. How do I draw a budget for myself if I have no accounting background? The budget we are talking about here is not that complicated type of budgets we have, I mean, with either firms or organizations, because that one, it runs into millions of cedis, not that type of budget. But personal budget looks at my income and my expenditure. So I can write down the items I will buy every month. How much do I want to spend on food, on electricity, water, phone, and how much is my income? So I'm setting up my expenses against my income, and that should help me to know that if my income is 1,000 cedis, I have to prepare the things I will need such that to be equal to either the 1,000 cedis or come to 800, so that I'll be able to save the difference. So budgets can be that simple.
Thank you, bro. Before we go to those whose hands are up, there are two questions that I want to read from the chat room. The first one from Enoch Amo, and he says, is budgeting meant for only the rich? If no, how can a poor man earning as low as 500 cedis a month under this current information rate plan a suitable budget? Is there a possibility to have sample one to educate our illiterate parents in the village?
As I said, with regards to the budget, Enoch, I don't think that you need a sample something to plan your budget. You just sit and ask yourself, if I earn 500, how am I going to live with a 500? Government can run a deficit, but individuals cannot run a deficit budget. Why? Because government may have the capacity to borrow. Okay, but as individual, you are earning 500 and then your budget is 1,000. If you are going to borrow 500, at the end of the day, how are you going to pay for it? So budget simply means that plan your expenditure according to your income. So you look at how much you earn and then plan such a way that at the end of the day, you will not go beyond your income. So look at the items that constitute your expenses, look at your sources of income, and then put them together as a budget.
Thank you, Prof. The next question is, please, is buying insurance policy a form of investment?
There are two types of insurance policies. One is for protection against some happenings that we may not have control over. For instance, it's mandatory in Ghana to insure our cars. If I buy insurance policy against my car, that is not an investment. But I can have what we call personal insurance policy. That policy is a blend. It has insurance as well as investment component in it. So most of the personal insurance policies we do may give you some level of cover and at the same time serve as investment, so that at the end of the day, I may decide that I'm doing a child education policy, which will be something like monthly, quarterly, half yearly, depending on your decision, or even annual deductions. That is an investment. At the end of the day, the money will be refunded to you with interest or returns on that investment. But not all insurance policies are investment, but we have policies that are investment.
Thank you, Prof. We want to take the last two questions and we'll be done for this section. So Thomas Banfo, please, your hand is up. Kindly ask a question.
All right, thank you very much. Please, my question has to also be with, as you being the person and expert in the field of finance and investment, I would like to know, looking at we the young now coming with not too huge money to invest in cars, lands, properties and stuff, estates and stuff, are there some recommended reliable investments you could at least show us the way so that we can have a reliable investment there? Thank you very much.
When you don't have, much money to start maybe investing in cars, estate and all that, in my view, the best option may be financial assets, fixed deposits, treasury bills. If I have 2,000, 3,000, I can't go and buy a car with it. So I may have to save, but savings alone in Ghana do not also give us any good return, and therefore you may consider fixed deposit, you may consider treasury bills. It used to be government bond, now it's no go area, so treasury bills may be better. Land is also one of the best investment you can get, but that one is long term. It's risky in Ghana unless you be able to protect the land. And by protection, I mean either you build a wall, you erect a structure just to protect the land. Because sometimes if we tell you some of the experiences we've gone through when we acquire some pieces of land in the cities, Kumasi and other areas, you marvel. So it's a risky venture, but it pays. If you have money and you can, for instance, wall, erect security post for somebody to be always there to take care of it, fine. But even I've heard stories of people who have put on a foundation, and when they got there, somebody had built upon it and they were living in the house. So it's a very risky area. Save, save, and save. You have long investment horizon. You may have between 30 to 40 years even to invest. And therefore, even if you concentrate on savings alone and putting that money periodically into a venture, it's worth it. We have to be also mindful of not losing the principle of our investments. These days, most of these financial institutions may not be trustworthy. Get those who are trustworthy, well-established financial institutions, where if you save, if nothing at all, your principal will be protected. So that if I put 100 cedis aside every month for 40 years, that alone will run into thousands of Ghana cedis when I go on retirement. So the starting point, my brother, is to save and invest in financial assets. And when you have sizable money, you can think of other assets that require huge capital.
Hello, Prof. With your permission, Thomas has a follow-up. If you can quickly put it across, then you
Sure.
can help him out. Thomas, kindly get your question through for us. Thank you.
Okay, thank you very much, Prof. Like my follow-up, when you mentioned the T-bills, personally, I am a fan of that. I used to invest in the T-bills. But looking at the current brouhaha, I was tempted when I started reading, and then this portion of the agreement financial ministry brought was about to tempt the T-bills. Frankly, I stopped my own. And now I'm thinking of taking my money out from the financial system as I don't want to lose, because I know people who are losing their huge investments. So is it still reliable? We should go ahead, or at least we should wait for this debt exchange to come to a standstill before we can start whatever we have to do again.
Number one, at the moment, the only source of borrowing to the government is T-bills. And therefore, I don't think in the foreseeable future, the government can dare bring haircut to T-bill. If you have actually followed financial news, now whenever they raise T-bills, they are oversubscribed, because that is the only option available to the government now to borrow, and government cannot stop borrowing. Number two, there is something we call dollar cost averaging. Dollar cost averaging talk about putting or investing equal proportions of your fund at a regular interval instead of putting all of them as a lump sum at once. What do I mean by that? I have 10,000 cedis. I want to invest 10,000 cedis in my T-bill. If the minimum amount I can invest in T-bills is 2,000, I can choose to divide my 10,000 into 5, okay? And deliberately spread my investment. 2,000 in January 1st, 2,000 in 10th, 2,000 maybe 15th, 2,000 20th, 2,000 30th. Okay, so if there is going to be even any issue, you are not going to lose all your money at once. Some might have matured at a time, some issues may crop up, and therefore you'll be able to redeem some of your investment. But as I said, I have this strong conviction that government cannot bring this haircut issue to T-bills, because at the moment, that is the only source of borrowing to the government. Last month, they wanted, I think, 1 point something billion to oversubscribe by 25%. And the government took it because now government cannot issue bonds. Our rating is also low. We cannot borrow from the other external sources. So T-bills, to me, is the safest now. Thank you.
Hello, Prof.
Yes, please.
I mentioned that was our last question, but quickly somebody had put a message. I think this should be our very last question, and I will be grateful if you permit that I read it out to you.
Go ahead, please.
Okay. So Kofi is asking, please, with the savings, won't the money devalue with time since the cedi keeps depreciating?
That is a good question. But Kofi, if not savings, and you keep the money at home, it will even depreciate or devalue more. With savings, at least you will get some returns. And when we talk of savings, please, as I said, don't just put the money in your current account or savings account. Current accounts may give you nothing. At the end of the day, they even deduct something they call maintenance fee. I don't know what type of maintenance the banks are doing for us, but that's what they deduct. What is significant is that as soon as you get sizable amount that you can use to, for instance, buy a fixed deposit or T-bill, use the savings for that. In that case, you will earn something on the savings, which may be equivalent to inflation, or even if it's lower than inflation level, it will be better. Whether we like it or not, we need to save towards rainy days. And therefore, as I said during my presentation, we need to have a buffer. We need to have emergency fund. So we may do that in spite of the fact that there are the possibilities of the money losing its value. But then it's better. If something happens now and nobody is there to bail you out, how do you deal with the situation? There can be sickness, there can be accident, there can be anything. How do you deal with the situation? So we need to have emergency fund. And if you have emergency fund, don't let it just sit in your accounts. Put it in a very liquid, highly liquid investment, which can easily be converted to cash. In fact, some banks have certain investment policies they call it PIP, personal investment plans. And if you have one of those plans, you put in request today, you are likely to get it today or tomorrow. And it earns good money too. So definitely there may be a situation where because of inflation, the cedi will reduce in value, but it's better than not putting your savings into anything at all, and then it will devalue even far lower. What is the current T-bill rate? It's now hovering around 25%, which is very, very high. So you put in 10,000 at the end of the year, you are earning about 2,500. It's not bad. Not bad at all.
And so, colleagues of the Grasag-Ucc fraternity, this is where time will permit us to end. We want to, first of all, say a big thank you to Professor Siam Fripon. Words will not be enough for us to express our appreciation to you for the time that you have been with us, your education, the number of things that we have sought clarification to that we didn't know before. Thank you so much, Prof. We want to thank Mr. Seriam Kao, who is still on the line. So we are so much grateful for the time too. We do appreciate it. And again, we want to thank Professor Mrs. Sarah Dakwa. She is a Dean of Graduate Studies or Graduate School, and she has also been with us. We are grateful, Mama, for always guiding us. We want to thank Reverend George Taki. He is the head of Department Accounting, School of Business. Thank you so much, sir, for passing through. We are so much grateful. We want to thank all of you colleagues for making time to come. But before I come in with the announcement, I would want to let you know that there are a number of programs that the association has put on the bill for you. Some of them will be online, and we will kindly want to ask you to please follow the association on all the social media handles. Facebook is Grasag-Ucc headquarters. Instagram is Grasag-Ucc at Grasag-Ucc. Twitter is at Grasag-Ucc. YouTube is also Grasag-Ucc. So kindly follow the association social media handles and then get updated on all the programs that are coming up. Prof, permit me to find out if there are final words that you want to give to the student body before you go, and possibly your social media handles, or if they want to contact you, is it possible that they can get your contact?
Yeah, thank you very much. My contacts, my telephone number is 050 050 and my email is sfrempong@ucc.edu.gh. So you can contact me in any of them. Thank you.
Thank you very much, Prof. God bless you so much.
You're welcome.
So as we told you earlier on, the first presentation which we had on the topic financial literacy and debt exchange in Ghana, the slides we made available on all our social media handles, especially on our WhatsApp platforms. So, and the recording would also be placed there. So kindly stay tuned for it. And then if you are not, if you are here and you are not on any of the platform, you can leave your contact in the chat room. We can quickly save the contact and add you on. Thank you so much. Our final appreciation to those our brothers and sisters from Kud and Sandwich who were able to join this conversation. Please stay tuned for some interesting programs which have the intention of building your capacity. Thank you very much. Bye-bye.